No doubt, the jobs market is robust and thriving. April non-farm payrolls came in at an eye-popping 428,000, telling Wall Street the labor force is strong and not slowing down. Wages are up, job openings are up, and unemployment remains low. So why aren't investors celebrating this report? Despite the great news, markets finished the day sharply lower. So what gives? Hi everyone, I'm Veronica Dudo, and to answer this question, let's turn to the traders. Tobin Smith, Todd Schoenberger, and ValuEngine Capital's Chief Equity Strategist and Portfolio Manager, Jordan Kimmel. All right, Toby, you say the strong jobs report is actually bad for the economy. What exactly are you talking about?
Well, let's put this in context for a second. We have had a 12-year bull run because the Fed pumped $7 trillion into the monetary system. Now they have to pull that out. But the reason why they're pulling it out is because they need to reduce demand. We're showing here that with these job rates that they could raise rates another 300-400 basis points, in other words, 3 or 4% to get demand down. And that's what people don't understand, Veronica. For some crazy reason, they think that we're in the age of every stock gets a trophy, right? Well, that age is over. You know, there is no alternative to stock. The new alternative stock is, dude, I can buy a bond and get 3% risk-free. And if people think that that the Fed is going to be able to make this soft landing, I just love that term. It's literally impossible. The only way they can make it happen.
Anytime soon.
Yeah, there's no soft landing. Oh, we're going to have a recession. And the bond market is pricing in a recession. Now the stock market is taking the cue from the bond market. And that's why we are negative on stocks and we love commodity stocks, kiddo.
Jordan, jump in.
Well, you know, the point they're making is so good because a lot of people just want to root for the stock market, and the long-only crowd is in bad shape right now. And as far as landing, you know, soft landing, they could do a soft landing if you could land a 747 on an aircraft carrier. That's not really going to happen. So, you know,
or Kitty Hawk.
Todd's point about the jobs being bad for the economy, it may be more bad for the market. You know, we want to hear people working. We want to hear wages going up. But to Tobin's point, they didn't ring the bell, but the bull market ended. The bear market started, frankly, several quarters ago. And the advanced decline line's been a disaster. And,
but it doesn't, you know what, though? It doesn't feel like a bear market, does it? I mean, you can walk around Wall Street. You're not getting that feeling of pessimism and doom and gloom. There's still a feeling of there's a lot of uncertainty out there, but you don't get that, oh my goodness, what am I going to do to pay my rent next month? It just hasn't happened yet. I think once that starts mixing in with how Americans think, then we're going to be in real trouble.
Well, but Todd, we're not talking about the real economy. We're talking about the financial economy. The financial economy, the S&P was 900 frickin' points in 2008. It's now 4,200. The NASDAQ on a relative basis is up as 600%. The financial economy is driven by how much money the Fed wants to give the financial economy and how low interest rates are. That's it. At the real economy, we are recovering. We are post-pandemic. Everybody wants to frickin' travel. I think everybody in my neighborhood has already made plans for Saint-Tropez next, month, right? But that's not what we're talking about.
Let's go.
We're talking about the value of stocks. Yes, we're talking about the value of stocks relative to bonds, and they're still way too high. And I guarantee you this: when people open up their first quarter, 401k report, let's say you don't look at it until every quarter, they're going to have a Maalox moment, and that's a really nice way to put it.
Go ahead, Jordan.
Todd, let me jump in here and say, this has almost been textbook, and why you say it doesn't feel like a bear market, that's because the generals haven't been shot yet. If you're in what they started calling long duration stocks, the Shopifys, the Horifys, the things that have 200, 300 price to sales, those stocks are decimated 70% already. So the generals haven't been shot yet, but if you jumped into the SPAC market, if you follow people into this thing that earnings don't really matter, 200, 300, not price earnings, but price to sales, the warning was on there. And if you own those, Todd, you already are in a depression. You're not having a personal recession.
Now, we are starting to hear
Yeah.
some inklings of layoffs at Robinhood, Netflix. Is this a trend we should start to watch?
Yes,
well, number
definitely.
one, Veronica, if you look at the engineers, I mean, software engineers, 9% at Netflix laid off. Silicon Valley, by the way, it's not Silicon Valley, in case anybody wants to know that. It's Silicon Valley. In Silicon Valley, there is an entire Silicon Valley,
Professor.
by the way, is Silicon Valley is Rodeo Boulevard in Beverly Hills. In Silicon Valley, we have a world where all of a sudden it's always been, flowers and joyfulness and, unlimited sushi at lunchtime. And yet there is a recession in engineering jobs. And the ones that have jobs are selling their house there and moving to Austin, Texas, or moving to Scottsdale, or moving to Florida. And that is already happening. And it's a big issue.
All right.
Todd, let me just tell you why I think that's happening, if I can. These software companies in particular weren't making any money, and they were just raising money. It was so easy for them to raise money, and they never had their eye on the
Great
ball.
point.
In terms of the old Microsoft, where they actually had earnings. So they were raising money, buying each other. I think there's a little shell game going on, frankly. How many companies could be in CRM? How many companies could Workday, Workspace? How many of those really make sense to have a $40, $50 billion market cap? So they can't raise money anymore, and that's where the layoffs will come.
Interesting point, Jordan. Thank you. Unless you've been living under a rock, the Federal Reserve did exactly what everyone expected this week: raise interest rates by 0.5%. But one of our traders thinks the move puts the Fed in a corner that seriously jeopardizes the U.S. economy. Stay tuned to find out.
Oh, and fuck it.
Buy, hold, sell live, brought to you by Transformity Research.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years, but more importantly, this year, we're up about 67% in our portfolios, while the S&P is down, 12% and going deeper. And the Nasdaq's down 25% and going deeper. Let me ask you this, are you tired of losing money? Because right now, we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformityresearch.com. Get on our free newsletter, transformityresearch.com. Join us for free and stop losing money.
Like button.
Lights, cameras, connectivity to every kind of screen, with 6 broadcast studios and experts ready to help plan the event. Big Wig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences. Let's get started.
Well, there was no shock and awe from the Federal Reserve this week as it raised its benchmark Fed funds rate by 50 basis points, leaving many to wonder if it's enough to curb runaway inflation. Toby, you have a thought on this that many on Wall Street have yet to consider?
Yeah, how much time do you have? Remember, the Federal Reserve it only does one thing. It only can manage one thing, which is demand, right? So if you need to make demand go up, you lower the cost of funds. So in the 2000, early 2010, 2012, we got mortgages down to 1%. We got auto loans down to 3%, blah, blah, blah. Now we're the complete reverse. We have to unwind $7 trillion with a T of cash money that was basically pushed into the monetary system. If you think about it like a bathtub, right? So all the stocks, everything went up. Every stock got a trophy. and now we have to unwind $7 trillion. Oh, by the way, and we have to take down demand, which means we have to raise interest rates to the point that the people, the marginal buyers, don't go buy that next house, that next car, that next whatever. It ain't going to make it at 3%. That's my point. By definition, if you use the math says you need to be at 4.5% rates, and then all of a sudden everything else gets to the point that it's so expensive that demand comes down. But until they get there, it's not priced in the stock market. It is priced in the bond market. And when it comes to rates, the bond market is the genius, and the stock market is Jed Clampett.
Todd?
Yeah, I mean, he's right, though. But here's the thing that I don't understand because we all know the number, obviously, at 50 basis points. It was very transparent. We knew what was going to happen. But at the press conference afterwards, I really thought Powell put himself in a corner once he said, okay, we feel that we will be able to have, like you said, that soft landing. We're going to be able to move forward. We're going to see prices sustain, blah, blah, blah. You would think he was running as president. I mean, he sounded like a politician at that moment, not as a Federal Reserve chair. So because of that, now going forward, now you really put yourself in a hole, because once you have numbers that came out, like the jobs report for April, how good they are, and everything's on fire and everything's doing great, now you have to wonder, is the economy going to keep cooking, go into the summer, and then the Fed, what are they going to do? Are they going to actually have to hike rates even more? Because if that happens, this Dow and the S&P, you're going to see monster 20, 25, 30% drops. It's not going to. It's going to be really ugly, actually.
Yeah. He also said we work for the people, so that was an interesting part of the press conference. So, Jordan, what are your thoughts?
Powell,
well, my thoughts is that Powell's really been very clear in telegraphing what he wants to do is actually have demand destruction. And I think Tobin hit it, right on the nail. And so I've been in the business. I don't want to date myself, but interest rates were on a straight path down for 30 straight years, okay? What we're seeing right now is that the Fed would always come out when the market would get weak and try to save off a recession and try to come to the rescue. What they're saying right now is that we're going to create demand destruction. It's okay that people shouldn't really want 3-4 houses. Maybe they want a little bit less. And so what we're going to see is rates are going to come up. And whoever thought that the business cycle was cured and that everything is straight up?
Right.
The truth is, when you have a recession, you have to be able to grow at the bottom of the recession, not be grounded out and be on margin and get grounded out on the way down.
Yeah.
So
now listen, my new best friend Jordan.
Go ahead, Toby.
Yeah, but go ahead, Veronica. I mean, I think another part people are missing is that the Fed only has two jobs. One is to have maximum employment. Number two is to have growth, right? Well, guess what? We could lose 5 million jobs and we would still be at maximum employment. And that's the point I think people are missing here. Not to butt in, but I butt in. And by the way, Jordan, we have to have him back. He's right on everything.
So everyone is talking about the possibility of a recession, except the Federal Reserve. So what does Jerome Powell that the rest of us don't know?
Good question.
Well,
That's a really good question.
Let me go in.
Yeah,
I think what he knows is that it's okay to actually have ups and downs in the market, and you shouldn't go, Toby talked about it straight up for 8 years and whatever. The point is you're supposed to have a business cycle, and it's actually okay. We're probably in a recession, and recessions are always backdated, and then we came out of a recession. You never know you even came out of it. So one more quarter of a negative GDP, that's really, it's already baked into the cake that the fact is rates will go higher than what Wall Street, what the long only, always be in an index, always be long only. That crowd is wrong, and they're still marching to the absolutely wrong tune right now.
Okay.
Right now, but let's add to this. Let's add to this. People don't understand that the S&P index is a market cap weighted index, same thing as the QQQs, which means that the stocks that are worth the most, like Apple, gets a 5 times bigger value than the stocks that are worth the least. It used to be energy stocks only were 2% of the S&P. Now we're completely flipping. But here's the ratchet effect. When people barf when they open up their 401k and they say, all right, I'm out of this S&P 500 and the QQQs, when they send that money, they send that order in to sell, the cash comes the most out of Apple. It comes the most out of Tesla. It comes the most. So we're getting the reverse. The Fed is looking for the reverse wealth effect, so people don't feel quite as wealthy and they don't spend. We're getting the reverse stock effect.
All right.
Great point. Great point. And remember when GE was the largest company in the world? It's now down only about 80%. So names change. Indexes will come back, and they'll come back with different names. It's not always the same names that drive the index higher when we do eventually start to go back up. And that's not around the corner either.
All right, thanks, gentlemen. There is an underlying problem with the world's food supply that's barely being discussed until now. Coming up next on Buy, Hold, Sell, the traders discuss a troubling trend that will virtually impact every human on the planet. Stay tuned. Buy, Hold, Sell, brought to you by CrossCheck Management.
Hey, do I need to sell Cal?
Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. Yeah, well, that does. I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios. From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.
Welcome back. There's a raging bird flu virus in the country that has killed over 37 million chickens and turkeys and doesn't appear to be slowing down anytime soon. With food inflation already at record rates, what should we expect in the months to come? Todd.
Yeah, it doesn't look good right now, Veronica, because you start looking at just something like eggs. Eggs actually reached an all-time high in April, reaching $2.90 a dozen. You have turkeys that hit an all-time high of $1.47 per pound for a whole turkey. Thanksgiving's not going to look good. Toby, your favorite restaurant, Chick-fil-A, they're going to be spiking up those prices there. I mean, going forward, it doesn't look good for food inflation because we're already looking at double-digit rates right now. Now you take something like chicken away, or obviously they wouldn't be taken away, but you're looking at a limited supply of chicken. And when that happens, you're looking at chicken nuggets, tenders, everything else. It's going to be quite expensive for everybody, and I'm surprised nobody's talking about it.
Just when you thought it couldn't get any worse, the war in Europe, COVID, now bird flu. Toby, your thoughts?
Well, I with all due respect to Mr. Schoenberger, the chicken prices are chicken feed compared to what's going on for the price of corn, the price of wheat, the price of soybeans.
Right.
That is a world disaster. And we're already seeing in almost all North African countries, we're having food riots. If they don't have food riots today, they're having them next week. The prices are up 6 or 7 times because there's no wheat to come from Russia and from Ukraine. you can't ship it. Brazil is on a whole different weather pattern, right? They're not harvesting now. So the bigger issue is not chicken. I'm sorry. The biggest chicken is, what are you going to feed chickens, and how much is it going to cost? And so you may lose 37 million chickens. Who cares? There's about 2.5 billion chickens all over the world. But you can't afford to feed them, Todd.
The last time this happened was 2015. We had bird flu across the country. We lost 50 million birds. That's good. We're going to obviously clip that number this time around. That you have to wonder, though, with the expenses that are going on right now, this is more crippling power on the household balance sheet. When you start thinking about less discretionary income, that does have an inverse effect. And you will see that down the line. And you might be poo-pooing and saying, no, it's just about chicken nuggets. It's not about the chicken nuggets, Toby. Everybody eats chicken. They might not eat steak, but they're going to eat chicken because it's lower cost. It's lower cost for the family than having to go out and buy 4 steaks to put on the dining table.
Hey, Todd, I know you have young men, sons there who probably eat a ton of chicken. But on a relative basis, if you look at what the USDA says, they say that the average household spend on chicken is less than $40 a month. If it went to $50 a month, Todd, no one's going to be, clucking. It's not that big. I think you're completely overblowing this.
So officials are tracking it. It's also happening in Canada, and they say it never has happened in 2 provinces at once. Jordan, what are your thoughts?
Well, so my thought is, it's not a laughing matter when the general public sees their food bill going absolutely berserk.
Yes, thank you.
It's not only eggs, it's not only chicken. But I got to tell you why this segment hits home to me is, I use a quantitative model called Magnet, and it brought me into a company called Calmaine, and they're one of the biggest egg producers. And knowing the segment's coming on, I'm a little scared that my company's going to get caught up in the crisis. So on one hand, the price of their eggs skyrocketed, and it's helping their earnings. But it's something that could actually be specific to a single stock or a stock picker like myself. I don't really use indexes, but for the real, big picture, Tobin, the food thing. You go into the supermarket, and especially older people and people on a real budget. The food, it's a crisis right now. They probably spend a lot more money on overall food than they do energy or filling up their gas tank. So it's not only the eggs, but Tobin, I'm sure that maybe the line maybe at Chick-fil-A maybe gets a little shorter, and that's the silver lining.
Well, that's not having Chick-fil-A is chicken crack, okay? You never give up chicken crack like Chick-fil-A, I'm sorry. I drove by a store coming here.
Best.
Honestly, gosh, there was 50 cars piled up to get a freaking Chick-fil-A sandwich for $3.50.
Yeah.
If it goes to $400, it's not going to change their life. And I'm not making light of chicken.
Public, right? If that stock goes public, we're all buying, right?
No
so even
question.
if you want to try to get more fruits, vegetables, and
I'm not
bread,
making
that's even going up.
Yeah, I mean, I'm not making fun of chicken. It's everything's going up because remember, you have to feed the chickens with corn and with, you have to feed the pigs with corn and with soybeans, et cetera. It's at this commodity level that's making those prices go up. My favorite bone-in ribeye prime steak, which was $22 a while ago, is now $38. I went to Five Guys to get my favorite hamburger. Used to be, they had a picture of what the price was 5 years ago. That burger, my favorite, was $3.39. It was $11.59. That's where, that is where the price inflation is really at. It ain't just chicken feed, okay?
All right, great
This got me hungry for a burger, Tobin, so.
All right,
but,
great discussion.
The price on the burger, that's kind of outrageous.
Coming up next, we talk about real estate and the American vibe about homeownership. Buy, Hold, Sell Live, brought to you by Transformity Research.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years, but more importantly, this year, we're up about 67% in our portfolios while the S&P is down, 12% and going deeper. And the NASDAQ's down 25% and going deeper. Let me ask you this. Are you tired of losing money? Because right now, we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformityresearch.com. Get on our free newsletter, transformityresearch.com. Join us for free and stop losing money. Yeah, or a Harley.
Like Buy, Hold, Sell Live, be sure to smash the like button.
Lights, cameras, connectivity to every kind of screen, with 6 broadcast studios and experts ready to help plan the event. Big Wig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences. Let's get started.
Welcome back to Buy, Hold, Sell. Wouldn't you know it, even as housing values continue to climb around the country, a record low number of Americans believe now is the right time to buy a home. And the trend doesn't seem to be improving anytime soon. So Jordan, what are you telling people who ask if they should buy a home in this environment?
Well, owning a home is a nice thing, and it's better, it's a home is better, than a house, so to speak. But, in the past, home ownership has been a good investment. It hasn't really, honestly, been the best investment. And when you add taxes and upkeep and lawn care and all that kind of stuff, I have to say sometimes I would believe renting and investing your money smartly might even be a better investment. But the overall home ownership is desirable. And what's happened is we have too few homes for too many people that want to buy homes still. And so the home building business, which seems like it might come under a lot of pressure, or it has come under pressure with interest rates, there's going to be more and more and more houses that need to be built. I'm not sure it's the greatest investment, though.
Okay.
Yeah, it's an awful investment. I got to tell you, look, if you're going to buy a home, plan on dying in the home. It's the worst thing you can do for yourself right now. With all the maintenance costs, the electricity costs, everything that goes along with it, it doesn't make any sense to go out and buy a home right now. And then you have to take into account property taxes. You start seeing the property tax numbers in this country. They're at record highs, and they're only going to get higher because we have to go and we have to fill up potholes everywhere. I'm broadcasting out of Buffalo, New York. It's like driving on the moon here. They can't raise the property taxes enough. Not to mention the fact they just dedicated all this money for that stupid new Bills stadium, which makes 0 sense. But buying a home, stay away from it.
Way to stay on topic, Schoenberger. Number one, not every person is made out to be a homeowner, to have a mortgage. To have a mortgage, it hasn't changed. You need to have consistent income. If you have a 2-family income, you got to have a mortgage that's based on that. If one person had to quit working, you could still pay that. Not everybody's set up for that. The second issue is if you live in areas that have gone through this hyperinflation of homes, where I just talked to a bunch of people on Facebook recently. We talked about what we paid for our home and what it's worth now. They're worth 5, 6, 7 times what they worth. Now, that's great wealth generation for the boomers and the millennials. But for a younger person coming in, buying at the ultra tip market, remember, a home is only worth really what you can buy it and rent it for. That's basically the non-bubble. Many of these homes are 3 to 4 times higher than you could rent the home and pay the mortgage, which means they're in a maximum bubble. And if you don't, in many parts of the United States, I'm from Southern California, everyone I know is a multi-millionaire simply because they owned a home for 30 years or their parents gave them a home. And now to go sell it to somebody, the next buyer, you could be way underwater very quickly. It's time to just rent and let the house come down.
And it's a really interesting situation because a lot of consumers feel stuck between a rock and a hard place because you're seeing home sales surging along with mortgage rates, but then at the same time, rents raising up a lot.
Yes.
So it's a tough one.
Quite a bit. But then you can also take a look at the Wall Street. Look, real estate stocks, Willow was down 9% yesterday and another 4.5% today. All the home builders are down. You're right. There's just not a lot of supply out there right now. But it's not like we're breaking any barriers with hiring new construction people to build these houses. Going forward, you said it best. Toby, you cannot, if you try to sell a house at a top dollar value, you're just going to get some sucker buying it. And good for you if you can, but you shouldn't be the one buying that house.
Yeah, we're also, let's quickly say that my home builder associates, et cetera, tell me that it takes 6 months to get new windows. It takes 9 months to get certain appliances and other things. The supply chain is just crushing the new home builders. We have an investor in a number of two of these companies, one private, one public. We're doing great, but they are way out of the norm. Mostly you can't get parts and you can't get laborer, and you can't get skilled labor, and we're going to be in this deficit of home buyers versus homes for a long time. I'm just saying is that when you go in to buy a home today, if you're buying an existing home, that's going to be at the peak of the market. If I want to buy a new home now, I want a new one. I don't want an old one that I have to fix up.
All right. Enough of all of this, guys. Let's start talking about sun and fun and going on vacation. Ooh. Coming up after the break, we discuss Google's travel trend survey. The results may surprise you. Google released its annual travel trends survey this week, and it comes as no surprise that more people in a post-pandemic world are jetting off this summer. What is a surprise? The amount of people seeking passport applications, making the top 5 destinations all international. Toby, I'm told your life is a vacation, so tell the viewers the best stocks to benefit from a flood of new international travelers.
Yeah, well, let's take it from the high end to the mid-size. At the high end, we like Lind Expedition, L-I-N-D. They run, by far, the best not only river, ocean, land, bicycle. I think I've been on 6 different trips with them all over the world. Top rate. For people at the top end of the income spectrum, they're spending big money. We bought everything we need to buy. Now they want to get the hell out of Dodge. And the mid-side, I'd like Booking.com. Booking.com is a platform, so they don't have any hard costs. They just get a fee, and then that fee, they're getting about an 80% margin. But now you can do home rentals through them. You can essentially do a VRBO or Airbnb type of thing. So those 2 ways are going. But I tell you this, we know this because we do a lot of polling. People want to get the heck out of Dodge. And remember, only about 11% of Americans have a passport that's been stamped outside of Mexico. So that's why you're going to see people really want to get out of here. It's true. It's absolutely true.
Yeah, I believe that. I definitely believe it.
Go ahead, Todd. Good.
Well, I was just going to say, I mean, obviously you could go with the brand names that are out there that have that international presence. Marriott is my favorite right now. I mean, you can't go. Hilton is another one. When you look at all of the Hilton and Marriott brands, you can't lose with them. And it's such a great story because it really, forget about whether the Fed's raising rates or jobs and et cetera, just the fact that people are actually getting back out again, they're living their lives and they're willing to travel and they're jumping on planes. I think that's fantastic news. So yeah, I would stick to probably some of the brand names that are out there, but that also have that international presence.
Well, Todd, I'm glad I let you go first because you just sold my idea. You know, mathematically on Magnet, Marriott ranks up as #1 in that space.
Yeah,
and
that's a good one.
So, you know, for all the right reasons you just mentioned, and I have to say, maybe I'm a little bit of a contrarian, but my backyard is an oasis. And today my pool opened. I'm in the Northeast, and I love to travel. I don't love the lines, and I'm so happy the pool opened today. And people that know me know I love my backyard. And
so I'm curious.
Toby and I will be there.
Oil prices rise. Could this reverse the vacation trend? Toby?
Not really, because the cost. Yeah, I mean, the costs are being passed through by the airlines. This is the first time I've ever seen that airlines, can. I just, I did a trip up to Tahoe from here, and the small little plane. They wanted, the last time I did the trip was $125. This time it was $500. I had a client who was paying for it, so I didn't care. But they're able to pass through, and the plane was packed. And everybody I know who's been out here to Scottsdale, who's flown out, said, Toby, I love your backyard too because you have a big wine cellar out there. But I'm telling you, the $1,500 to fly from round trip to D.C., New York, people at the higher 20% and can do it, but nobody in the bottom 60% is going to pay $1,500 to fly to Arizona.
Well, we'll drive out the sky.
Well, your wine cellar sounds pretty good, Tobin. And, I have to say, that I was just in your backyard last week or so, out in California. And you know what? You just bite the bullet. The plane tickets cost more and it feels like a little pinch. But, you guys talked about the pent-up desire to travel. And people aren't going to let that several $100s, which does bite, they're not going to let it get in the way of the overall do or not go or not go.
Yeah.
Do you think
the
war in Europe is going to have an effect on anything?
What's that, Veronica?
The war in Europe, do you think that could maybe dissuade some people from wanting to go there, or how does that factor in? Does it at all?
Well, the data from Google said that the #1, it's the big three, Paris, London, and Barcelona. That's the big three.
Yeah.
So, again, people who have the means to do it are going to go. You're flying over the war. Everything's going to be more expensive. I mean, the bigger issue is that, for me, to, in Paris to get my steak à poivre used to be like, 15 francs. Now it's got to be 35 francs. I mean, the cost in Europe is unbelievable. Oh, and by the way, on a per gallon basis, a gallon, if you rent a car, and they're doing in liters, but on a per gallon basis, the cost of a gallon of gasoline in France is $18 a gallon right now.
That's crazy.
I mean, you can't make it up. But remember, they tax. Americans don't understand that every other country other than our country, almost 60% of the price is their tax. So when you add the underlying cost plus the tax, $18 again, I'm going to freaking run. I'm going to do a marathon.
Yeah. So true.
Well,
so true.
Well,
listen.
Location, like you say, and everything. And Toby named all the hot spots. And sadly enough, there is a place in Europe that no one can go to right now. And your hearts are with those folks. But in the travel destinations, I bet you those hotels are booked solid.
Great. Well, fantastic discussion. Coming up next, it's time for predictions. Let's make some money. Predictions. Toby, what's your buy, hold, and sell this week?
All right. Well, I'm buying LPD. It's a company that ships propane and butane. They're making a ton of money. They just announced a $2.50 dividend, and the stock is $12. So do that math. What I'm selling is anything that's left, although I never owned the crap to begin with. The ARKK, Kathy Wood, woo, 70 times nothing earning stocks. And then I'm holding the entire energy spectrum, as I say, from shippers to drillers to exploration and then to LNG, because natural gas, as I said, you can live without some oil, but you cannot live without natural gas. We're in World War II, we're in Cold War 2.0, and we're de-Russifying the world. So hang on to them.
All right, Jordan, your buy, hold, sell this week.
Well, you know what? Toby just hit all the right sectors, and I don't want to actually give out my exact names. He actually said the exact spaces. I happen to be also short a whole handful of stocks, some of them in China, some of their biotech companies, which are just unraveling. I can't understand how you could hold them in your portfolio. But I want to make my prediction is that the generals will get shot. The privates already left the field, and the generals will get shot.
Well, who are the generals?
Well, the generals
who are the generals?
Microsoft, they're Google, and you know when they come down, absolute fear will come down. But you already see a lot of stocks down 70%, and you know the strange part is from top to bottom. Bear markets go from top to bottom in about 2 years. The top of the market was a solid year and a half ago. So I'm going to say look for a midterm election bottom. It's too soon for it to bottom in September, October, but prices will be lower by then.
All right, Todd, close us out.
Yeah, quickly here. I'm going to say we just talked about travel. I'm going to say Southwest Airlines is a big winner. Definitely want to find something you're going to be part of that space. That's going to be your one stock. I'm holding right now the I-bonds right now. I'm thinking once I saw a 9.6% interest rate, of course it's only for, 6 more months. If you're holding them, God bless you. You should keep holding them because that's wonderful. And for selling, get rid of Toll Brothers. Toll Brothers is reporting earnings, at the end of May. You definitely don't want to be holding on to that stock when they come out because it's going to be ugly.
All right. Great work, guys. That will do it for this week's Buy, Hold, Sell. Coming up next week, we will be joined by Wall Street Almanac's Jeffrey Hirsch. We hope you can join us. Until then, have a great weekend and happy Mother's Day to all the moms out there watching. Take care.